Hello, everybody. Welcome to Talking House. I'm Todd.
I'm Oana.
Okay, today is, normally it's 2 for Tuesday, but it's 2 for Sunday. This is our second video today. We just did a video about Silicon Valley Bank and the banking system and how it affects real estate. But today we're going to talk about something more local to Vegas, which is the condo market.
Right.
Which is absolutely on fire.
Right. And this happened before the Silicon Valley Bank thing. So it's not those same people that I talked about in the previous video going out and buying properties.
Okay, so let's jump in here. The first slide, market action index, it's at 40. It's going up. As you can see, the little gray area there was what it was a month ago. It was 37 a month ago. When we show you the weekly trend, you're going to be pretty blown away. But definitely condo market's improving. Okay, here's market action index. Now this is the 5-year look back of it. If you go all the way to the right, you can see this. We just showed you it was 40, but that's the 90-day average. That's a smoothed out version of it. The 7-day average is 46. If you go back and look all the way to the left, that's higher than all of 2018, all of 2019, all of 2020. So if a normal market is in the low 40s, which we said it is, a normal market action is about 40. Right now, this last 7 days has been 46, and you can see the trend that it's increasing. What does this mean for the next few months, probably?
Well, this is driven obviously by the lack of supply because there's not a whole lot of inventory. So lack of inventory, but it's the spring buying season. People are coming out to buy. Condos are kind of a special duck because you've got, there are lower price points, so they attract people who can't quite get into the single family market, but then they also attract investors because for the same reason that it's a lower price point, so it's an entry level for investors as well. Okay. The other thing is, lastly, because it's a lower price point, you're more likely to have people buying cash as well, because it's less money. So people buying cash don't care about the interest rates. So all of these things put together, we end up where we are today, which is lots of properties changing hands, but not as many as we would like, because that's what's causing this market action index to rise so quickly, because there's not enough inventory. Properties are being scooped up off the market. Okay, so let's go to the real-time market profile and look at these. So I have 5 things check-marked. Anything checked with a check mark is good, meaning good. It's good for the market. It means the market's improving, you could say, or whatever. Your housing investment's improving. Anything not checked is neutral. There's nothing checked in red because none of this is bad news. Everything is actually good news. So we'll start with the top one, median list price. You can see like 6 weeks in a row, it's gone up. Every week it's been going up, the median list price up to $275. I had somebody put a comment saying, oh, but list price doesn't mean anything. Anyone can list for what they want, but why? But literally that doesn't make sense, because yes, they can, but if you go down to where I have the double check mark, inventory, that's dropping like a rock. And I've got another slide that I'm going to show you to put this in perspective. If inventory is dropping, list price is going up, but you don't know what sale prices are going. What's going on with those? What would you guess is happening with sale prices? Because inventory is dropping, because we are selling more homes than homes coming on the market, and because list prices are increasing, that would tell me that in 30 to 45 days, we're going to see higher sale prices.
And actually, it's already happened. If you look at the next one down, price per square foot, it's already been skyrocketing. Price per square foot has been going up for the last 4 weeks. Price per square foot of condos is now up to $240. I've got another really good slide that's going to put this in perspective. Our median days on market, that's a good one because it always peaks in January and goes down, and it did that. It's dropping. And then the market action, you can see that how it's starting to take off there. So those are sort of real time. Here's the big one, price per square foot. Now this is over the last 4 years. You see the little dots that tell you what the median price per square foot was. So all the way to the left, you don't really see the dot, but that was the price per square foot. It was basically the same in 2019. So it went up and it went down, which is normal, right? Because it does that over the spring to the fall. And then prices kind of stayed the same, and then they shot up. But you can see if you look at 2022 to today, they're still up. So 2022, the median list price was about, or median price per square foot, sale price per square foot was about maybe 227, and today it's 240. So it's still up $13 a square foot. Home prices are up year over year for condos. Condo prices are up year over year. They're up year over year. They went up a lot and came down, but they're still up year over year pretty substantially. And then the other thing too is the 7-day average is 240, but the 90-day average is 230. So when that happens, that means it's trending up. It doesn't just change drastically. This thing once it changes, because what's going to happen is it's going to be pulling up that 90-day average, right?
Right. The other interesting thing to note is that traditionally, condos have not participated as robustly in appreciation as single-family homes. So looking at this, I think is very interesting.
It's very interesting. The other thing too is they're less sensitive to interest rates because, like Oana said, cash. The other thing too is people are just locking these things up even though they're getting a loan, but then they pay them off because you have a lot of people who are like, I'm going to move some cash from this thing that's only paying me 3%, and I'm going to take it and pay off my 6.5% loan I just got on this condo.
Right.
So just because people originate loans doesn't mean, oh my gosh, that's bad for housing. A lot of times those loans get extinguished. Okay. This is inventory. Inventory, as you look back 2018, 19, and 20, is absolutely way below, going lower. The 7-day average is below. It's half. If you look at the peak there, those two peaks, that's 2,000. We're already below 1,000. We're at like 940 and going down. So inventory is going down, and with less choices than, what does that mean? People have less choices.
People have less choices. It also means that it's more competitive for buyers, right? Because when you have more people chasing properties than you have properties available, you're more likely to have multiple offers. So you're more likely to have competition.
Okay. This is the last slide. This is price per square foot. This is the top 4 quarters of the market. So the top quarter, the second quarter, third quarter, and the bottom quarter. The bottom 2, basically the bottom 3 quarters have pretty much appreciated the whole way across. There was that little bump in 2021, which is a super hot year for condos. Prices really sort of skyrocketed in 2021 because it was almost panic. There was so much money out there buying. And you could see that even from 2021 to 2022, there were some slight declines. But then from 2022 to today, the top of the market's about the same, but the bottom 3 quarters of the market. This is just like the residential housing thing. So this is another one of those. Remember, a year ago, you were told 40 to 50% price declines in a real estate market. And so a bunch of people panic sold their places, paid all the taxes, paid realtors commissions, and stopped collecting rent. And now their place is worth more. So you wouldn't have paid taxes if you'd kept it, right? You would have collected rent for the whole year. You wouldn't have paid any realtors fees, and it would be worth more. You would like 4x lost by selling your property. Right. And we know we listed a lot of people's properties, but they all had different reasons. We didn't, we always asked them, do you have to sell? And everyone said, yeah, I'm moving, I'm doing whatever, death in the family, we're selling. Right. So the people sold. Right. Okay, so what does this mean going forward? Like when you look at what we've been looking at the housing market as 2 separate markets, houses and condos. Does it look like it's on imminent collapse? No. Like imminent crash? Prices are going to just tank?
No, I don't see that. I think it's an interesting time because with what's happening with Silicon Valley Bank, I know people say in the comments all the time, well, what happens to California happens to Nevada, and all cats and dogs living together in California, all kinds of bad things happening over there. This is going to hit Nevada. And I'm going to answer that in 2 ways. One, Silicon Valley Bank is actually closer to northern Nevada, so the Reno. But it's true. The Reno area is kind of their Reno Tahoe area is kind of their bedroom community. So they are more likely to have, if they're going to have an impact, they're more likely to have an impact there, and they're likely to have an impact there maybe in the luxury market.
Yeah, Tahoe.
Not necessarily in the rest of the market, right? And then you kind of have to put it in perspective. I mean, like how many of those people were going to buy a luxury place, up at Tahoe or in Reno. Probably not that many. So I don't think it's going to have any real impact. And as far as Southern Nevada here in Las Vegas, kind of the same thing. Well, okay, how many of those people were going to purchase something here? Not many. So I don't think it's going to have an impact on us.
On our market.
Is it going to have an impact over there? Short term, yeah. I think it's going to make people nervous for a little while.
There'll be some deals.
There might be some deals, but I think it's going to evaporate very quickly. But I just think in the next few weeks, I think you might see some deals. But maybe by the time we get to mid-April, this will be in the rearview mirror and life will get back to normal.
The beginning of 2021, there were some absolutely smoking deals in New York City in real estate. I think there's still a couple years of some deals in San Francisco and the Bay Area in general. But you can't just say California is doing bad, because San Diego is an absolutely on fire market, absolutely on fire. We're hearing, we're talking to agents there, even in Orange County. We did the video that Gantry had that 600 people come to his open house.
Right.
People asked, hey, what about Vegas? You don't get 600 people at open house. We're not an open house market. People don't buy houses here via open house. People go grab an agent, they go look online, and they go see the house and they write an offer.
Okay,
we've never in the. Go ahead.
So what I was going to say is, you're right. We're not an open house culture. However, when we have open house events, so we had an open house extravaganza in Summerlin, and we had one in Henderson last month, and we had a ton of people come through, because these were invitation only events, and these were luxury homes, and they were homes that you can't just see, right?
Right. You can look at pictures, but you can't get in it. You can't just go. You can't just call your agent and say, I want to see them. They're going to say, show me the bank statement with $5 million.
Right. So these were invitation only events, and it was a big deal.
Okay.
These were also some of these were also homes that are off the market homes, so you wouldn't even have known that they were listed. So the point is that even here we do have a lot of people showing up for open houses, depending on how they are done.
There's a lot of off. I'm surprised there are a lot of off-market homes.
A ton, particularly,
especially in the luxury market.
Yes, because in the luxury market, people value their privacy.
Okay.
And so they do not want to have to be put on display.
If somebody wants to buy an off-market luxury home, I'm going to put Juana's number. You can call her, and you can buy an off-market luxury home.
Okay.
Housing market's pretty hot right now. This is certainly 8-9 months ago, we would have been ridiculed if we had said home prices and condo prices would be rising right now, because this was supposed to be, we're watching the housing crash live sort of thing. But when I turn on my TV, I don't see that. It's the opposite happening, right? And this clearly is not going to continue. Real estate cyclical will probably continue. This will continue for at least 3 more months. It'll continue probably into June. July, August, September, it cools down. Comes buying season again. October, November, December, January.
So I think you're going to see listings cool off sooner than that.
Okay.
I think that the sale prices will go through, like you said, because remember, those are looking back. But I think listings are going to probably cool off by June.
List prices, you mean?
Yes.
Okay. All right.
Yeah.
So good time to buy is probably going to be, and we've never said now is a good time to buy. Actually, the only time we said it was October, November, December, January, which we were right. It'd probably be those months again. I would say if you're, if you don't have to buy now, if you're going to wait, then you can wait for those months, because you'll just have more stuff to choose from. I make no guarantee whether home prices will be more or less or the same, but you're probably statistically more likely to have more stuff to pick from.
Right. So yes, you're right. So statistically, you'll have more houses to choose from, and statistically, you will have less competition. So you'll be able to take your time and make choices rather than feeling pressured because there are 5 other people who are making offers on the same house. Some
other videos we're going to do a foreclosure video, talk about the extremely low number of foreclosures in Nevada. And we're also going to talk about the mix between homes that are purchased with cash, because that's really what's one of the things driving the market, is the extremely high number of homes being purchased with cash, even in the luxury market, for example. And I'll let you wrap up the video.
Right. So after the Silicon Valley Bank thing, I think there will be more homes being purchased with cash.
Yeah.
So how was the video? Did you like it? Did it give you some good information?
Did you like having 2 in one day, or was it too much?
Yes.
Because it's a Sunday.
Yeah, so. There you go. Did you like having 2 videos in one day? So let us know. Please like the video, subscribe, hit the notification bell, share the video, leave us a love note, and we'll see you on the next video. Bye.
Bye.